morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, December 14th. All right, guys. Well, another day up, another new highs across the board, and the VIX was up. Equities were up. Bonds were up. Gold is up. What does that tell you? That tells you put the red flags out because it is dangerous out there. I'm telling you right now, everybody is so one-sided. It's only a matter of one event, and we'll be back to where we were. This is just it doesn't happen like this. This is absolutely mad the way the markets are moving. But yet again, there's opportunity out there. You just have to go try to find it sometimes, and sometimes you just can't because timing could be off. You're looking for stocks to trade, and it's just not there. It's just the setup isn't there. The higher probability trade, and even more so now with a risk at extreme levels as we are right now, because we are at a fairly valued market, guys. There's no discount to buy in stocks at the moment, none whatsoever, unless you're buying a stock that they came out with some bad earnings and they knocked the stock down. But other than that, it's just there's no reason to buy stocks. Spiders at 228, we were at 209 just last month. Is just lunacy, crazy. And I just wanted to point out the high probability trade because by the way, I get a bunch of good emails. Keep sending them. That's great. They were talking about how what can you give us another example of high probability trade, and what I want to show you is here is the spider chart, and here's our TMT proprietary price channels. All right, and we interact this along with not just what's going on in the chart, by our TMT trading model and our algorithm that we use for buy and sell signals with dark pool activity. And we had a buy signal right here, right around, let me just grab the cursor, right around 11:15. Okay, now me personally, I'm really getting reluctant to buy the SPY or the Qs or any of the indexes, only because it's more if I can try to use a good example, slippery. The slope is slippery, if you will. When you're buying stocks, what's happening is that you'll buy a stock here, market goes up, and then she comes down here, stops you out to only go back up here higher. So your stops need to be extremely wide, so you have to take less share size. And for what? To have something to get stopped out again, or to have this nerve-wracking trade, and only just to go back up again? No, that's not me, and that's not a lot of professional traders as well. So here quickly, again, we had the entry here long. So what you could have done is, yes, you could have bought the spiders. Obviously, hindsight's 2020, right? Oh, wow, this is a great little long trade here. Also, we incorporate our proprietary levels, where you could see here on the charts, and this is one of our Pro Trader Premier video that we use, and if the market did pull back a little bit more, you would see that 227.47 is a great area to look to buy with a stop just below that zone. And this is what we offer you guys. Okay, so this is something I want you guys to check it out, TMT TradingMarketTechnicals.com, and you can see there's a little a video that explains what and how we use and what we use and what we give you guys. Okay, but the high probability trade was when the S&P got long here at 11:15. Then what you can do is, and we follow the all four indices, gold and oil, right? So what you could do is you could say, all right, well, oil is the equities are up, and oil was up yesterday at one point. Let's look for some oil trades or some gold trades, for that matter, if gold was down or up. And you could do that and dissect that as long as you have your watch list ready to go intraday. You can't do it if you're not prepared. And you look into certain stocks, and you look for that buy entry, because most oil stocks are weighted in the S&P 500. So if the S&P 500 is moving up, what's happening to the oil stocks? Obviously, if oil is getting killed and getting sold off, then obviously the oil stock's not going to do much. Okay, but if oil is steady and the markets are steady, that's something that you can use for a high probability trade setup. Okay, just wanted to show that to you guys and share that with you. All right, so gold, we are at right now about 1164 in the GC contract. That's a gold future contract. Looks like we are headed to our first target, okay, of 1120, 1125. So we have three downside targets. We have 1080 in a gold contract, we have 11, and then 1120, 1130-ish area. We're not that far away. Today is FOMC interest rate decision. Believe me, things are going to fly no matter what, whether it be more upside or downside move. And I would not rule out the fact that since we have gone literally ballistic to the upside since November elections. Okay, a little over 5 weeks. We've made a year and a half worth of gains in 5 weeks. I wouldn't rule out the fact that Janet Yellen raises rates 50 basis points instead of 25. And if that happens, that means that she's trying to cool the market down, and markets will sell off because it's unexpected. Okay, 25 basis points, maybe we get a little bit of a pullback, and then we continue to rally because it's already baked into the market. So we'll see what happens, but be careful out there. Make sure for your day traders, make sure you're flat going into that event. Okay, and if you're not, the longer term, obviously, hedging is a great opportunity right now since it's very, very cheap. GLD, just want to show you, I think the next target will be that 107.77 here in GLD. Okay. Next is going to be the spiders. Again, just clean. I took off the Fibonacci retracements. This is crazy, guys. This is just absolutely insane. And you could talk to any professional. They have never seen anything like this. Never. And I know I've never seen anything like this. Is from the election gap up in the morning. Okay. So remember, that close, the Friday, spiders were 208. We're almost at 228, guys, less than a month, and continually buying stocks because of what Trump is anticipated to do. It's just crazy, guys. We got a fully valued market. There is no discount. All right, stocks are at a premium right now. All right, so please be careful. If you don't think that the markets are not going to pull back, believe me, they will. They will, at least to the zone here, So anyway, that's the spiders. You can see how ridiculous the chart looks. 60-minute. Again, just want to show you that we are getting some market divergence here, some negative divergence while the markets are moving higher, okay, and on low volume, almost no volume. IWM again taking a breather, but I think you get back to the 38% retracement following that move here to the 21 EMA at 133.97. I'm sorry, 21 SMA. Sorry about that. And then lastly is the Q's trying to break out. We had the so-called FANG stocks, which is kind of silly that they keep naming all of these groups. But Apple, Google, Facebook, they all did well yesterday. So we are breaking out. Again, new all-time highs. Guys, use caution out there. Please don't get fooled with this euphoria, because that's exactly what everybody wants you to think. And yesterday's market on close order was only 60 million to buy. And we made new time highs across the board, and everything was up. Okay? Be careful out there. Watch that VIX. If that VIX continues to go up, with the markets going up, that means that institutional managers are afraid of what's to come, because that's where they're hedging their book, and that's why the VIX is up. Have a great day, guys. Watch the FOMC minutes today.